What's going on, everybody? What's going on, everyone? Another edition of Credit Questions. All right, on this, we're gonna jump into this a little bit late because I'm having too much fun with this, and I'm getting some good replies out there. And I want to thank everyone for joining in and asking questions and sharing and liking. Please don't forget to share and like. Even if you're not on live, please make sure that you share and like. It's very important to get this word out because a lot of this information we're not, it's out there, but a lot of us as entrepreneurs, we don't know where to go get this information. So I'm going to make sure that we're going to start early today. Again, Credit Questions is a 30-minute session where I actually go on live and I answer any of your credit questions. And hey, listen, man, it's exciting for me. It's really exciting for me, to go over these things. I get emails, DMs all the time about what a wonderful job that I'm doing. And the only thing I really want you guys to do is just share and like, because once this thing grabs on, it's just going to take off even more. I ordered a microphone today. I don't know how it really sounds right now, but everything is just, it's like building a wall. You know what I'm saying? And you guys are a part of it. So I'm really excited to have you guys, you know what I'm saying, to be a part of this, man, because this information is well needed. We're facing an epidemic out here, a pandemic out here. And, you know, with the news that we had yesterday and today about the stimulus checks and everything else that's going on in government and stuff like that, it's really time that we focus on ourselves as entrepreneurs and we do this thing and we take control of our lives. You understand what I'm saying? So it's 6:30 right now. Um, Trump has announced that he might be vetoing this stimulus package thing. Um, Again, this is just even more reason why we need to jump on this thing, get all the information that we need, start our businesses, and take our lives back because it's just outstanding. So on this episode 3, I actually did this Monday, and my unaware self trying to get on and stuff, my mic was muted. But I'm finding out on how to use 2 3 different devices at one time, and you guys are on the ground floor, so thank you guys very much. So really quickly in this episode, like it says here, we're going to be going over LLCs, the information on LLCs, S corp, C corps, the differences between partnerships and sole proprietors. All this information is, you can't sum up all this information in one slide. You understand what I'm saying? You can't, just dive into this and think that you have a great deal of comprehension on the differences when it comes to tax purposes just from these slides. I'm going to encourage everyone to, do some more digging because this is just the beginning. I want to introduce you guys to this information so you can do some footwork on yourselves. Me as an educator, I think it's very important for me to lay the groundwork for you guys. So when you actually find some information, it's up to you to do some more digging. Don't take my word for it. Don't take anyone else's word for it. When I was younger, I used to ask my dad, how do I spell a certain word? He'd say, look it up. So what I'm going to say to you is look it up. All the information that I'm giving you guys, I want you guys to look it up because this information is so important to how you structure your entity and understanding the differences. So welcome guys to Credit Questions, episode number 3. We're going to be going over LLC versus S corps and C corps, partnerships and sole proprietors. Now there are more out there, but that's for different those are for different episodes. Right now, I've been bombarded with questions about how to go over the differences. What are the differences? What should I do? I'm always going to defer to a CPA. I'm going to always advise you guys to talk to a tax professional. So again, welcome. It's 6:30. We're going to jump into this. All right. First and foremost, I really want to go over why it's so important to set up your business entity versus doing business in your private name. And yes, you are a private citizen, but for liability purposes, so you guys can protect your assets and not get sued, it's very important that you set up some type of business entity, okay? No matter what that entity is, whether it be a sole proprietorship, an LLC, an S Corp, C Corp, there's so many out there. It's important that you protect your assets, and this is what this video is about. So the first slide, and we're going to jump into it, is you see the differences here when it comes to your personal and your business. There's two different things going on as you see the slide. Okay, so your personal entity and your personal credit, that's all based off your social security number. Okay, so when you, as an example, when you go to say Office Depot or Office Max or Costco or whatever, and they offer you credit and you apply for credit using your social security, that's linked to your FICO, that's linked to you as a private entity. Okay, but when you do the same thing on the business side, you don't put your social security number. And I want you guys to fully understand that. It's very imperative that you understand that. This is the key to unlocking all the financial support that you guys need to establish and grow your business. So as you see in the first two lines, your personal entity, your personal credit, and you look on the other side on your business entity and your business credit. Well, your business credit and your business entity, that's based off your LLC and your EIN. Okay. Nowhere when you're filling out an application for your business stuff, you put your social security down. Okay. So remember that. There are no personal guarantees when you're setting up business accounts. Okay. Now, when you want to extend those credits, later down the line, and you're unlocking tens of thousands of dollars, hundreds of thousands of dollars, yeah, they are going to check your personal credit. Okay, because they want to know that A, you're not fraudulent, and B, that you actually do pay your bills on time. Okay, so follow me on this one, because this is the foundation of setting up your business. All right, so now as you look, you have your personal banking. Okay, that's self-explanatory, but again, it's linked to your social security number. And then you have your business banking. Again, that's set up through your EIN and your LLC. Okay, so learn these distinctions, guys, because it's very, very important that you lay the foundation of protecting your assets just in case anything happens. Now, the reason, like, I own two different businesses, and this is just to give you a quick example. Okay, I do marble floors. Okay, so I have a big account downtown Detroit. If anything happens, and let's say I break a tile or I break a vase, or just something out of the ordinary would happen, well, that company will come after me. If I don't have the correct business entity established, they can come after my personal assets. Okay, they take my house, my car, my savings, my checking, anything, because of that lawsuit. Well, when you set up the correct liability entity or business entity, you're protected. Okay, so learn these differences. Now, the FICO score. Now, when it comes to personal scoring, you have your FICO score. We all know about the FICO score. If you've been following me, or if you've been digging and asking questions about credit, your FICO score is specifically for your personal credit. Okay, but on a business side, you have something called your paydex score. Okay, now your paydex score is issued by Dun and Bradstreet. Again, that's another slide. I just want to lay the foundation for you guys. Okay, so within these first 30 minutes, I want you to have a clear understanding on what this is, why it's important to set up your business entity separate from your personal. Okay, and I actually had a conversation with one of my cousins this morning. She actually called me and said, "Hey, listen, I need to separate my personal finances from the money that I'm getting from my businesses, and I'm doing this way. How do I do that?" Well, this is the first step. This is exactly what you look at when it comes to establishing your business. You have to identify and how should I say, separate your personal from your business. It's very important, guys. And then when you look at the personal reporting, and then you look at your business reporting, your TransUnion, Equifax, and Experian, again, that's linked to your social, to your FICO score. On the business side, you have Dun and Bradstreet. Dun and Bradstreet is the oldest credit reporting agency there is, and it's for business, and it's linked to your EIN. We can talk about that at a later date. But I want you to understand that there are two different things going on here. One is personal, one is business. So then you look at your Experian and then your Equifax business. Now, a lot of people on the on the next line look at this, and this is like, it blows people's minds, because we're in 2020, 2021, and they're like, "Oh, 411, wait, 1-800 number, I don't use that." Well, the thing is not about what you think. It's really not about how you feel. It's about how the creditors feel. When you're applying for credit, they want to know that you're not fraudulent. They want to know that you're legitimate, and credible. That's how you're going to unlock all this money. It's not that hard. It's just you have to put work in. And I'm on the ground floor, and you guys are coming with me. So this ride is spectacular, and I thank you all. So again, you have your residence. Okay, your residence, that's your personal, that's your domain, that's where you live, that's where you rest your head at. That's not your business. Now, if you are working from home, I would say this. Hey, listen, get a virtual office, okay? If you don't want to get a virtual office and you want to work from home, you have to make sure that it's set up properly for tax purposes. Again, it's for liability. When you get up in a higher echelon of business credit, creditors are not going to feel comfortable um, issuing credit to a residence. They're just not going to feel comfortable issuing credit to a residence. It has to be a legitimate business. That's why a virtual office is so important. Okay. Again, if you're working from home, it's not impossible. It's just that there's more hurdles for you to jump over. Okay. So you want to have your 1-800 number. You want to have your 411 listing. You want to be searchable. You want to be credible. This is why it's so important to set up your business separate from your personal. Now, virtual office or your brick and mortar. Okay, that is the foundation. That's step number one, guys. That's step number one. So now when we get into the next slide, we're going to define and give examples of limited liability, S corps and C corps. This is the nut of it. Okay, now understand that a limited liability company is a business structure in the United States where the homeowners, I'm sorry, where the owners are not personally liable for the company's debts and liabilities. All right. Now, that is the golden goose of everything, guys. Okay. This is why you're setting up a business entity separate from your personal. Okay. Just for that reason alone, like the example I gave you, if I break a marble tile, marble is expensive. So I don't have the money for all that. And if I do, I don't want to pay them. I'd rather have, that's what business insurance is for. So that's an LLC in a nutshell. Limited liability companies are hybrid entities that combine the characteristics of a corporation with those of a partnership or sole proprietorship. And we're going to get into those definitions in a second. Okay. Now you have your S corps. Your S corps are going to be different than your C corps. Okay. Now here's the difference. And it's all about taxes. If you look here, S corporations are business corporations that elect to pass corporate income, losses, deductions, and credits through their shareholders for federal tax purposes. Again, all of this is about taxes and liability. So S corps, as you see here, they have shareholders. Okay, they elect to pass the corporate income, the losses, and the deductions, all of that goes through the shareholders. Okay. Now, as it says here, the term S corp corporations means a small business corporation which has made an election under to be taxed as an S corporation under subchapters of a chapter 1 of the Internal Revenue Services. All of this, guys, is about taxes and it's about liability. So when you get sued, you're protected, and when you file for your taxes, you're taxed at the right rate. That's all it is about. Okay. Now, your C corps, a C corporation under United States federal income tax law, okay, refers to any corporation that is taxed separately from its owners. Okay. Now I want you to dig in deep on that one because it's very important. A C corporation is distinguished from an S corporation, which generally is not taxed separately. So here you go with the S corp and the C corp when it comes to the definition of taxes, liability, and taxes. That's what this thing is about. C corporations pay tax on their income, plus you pay tax on whatever income you receive as an owner or an employee. Now, I'll give you a quick example. I remember I was in South Carolina. I was working for a company cleaning carpets at the time, and I was working for a great guy, and he was a very hands-on owner. So he would come to work every single day, work next to me every single day, and never ask me to do something that he wasn't going to do himself. And I really appreciated that. And at the end of the day, I would notice that he would write himself a check. he would issue himself a check. Okay, he would get a check just like I would get a check, and it kind of, at the time, I really didn't understand until I started to investigate business credit and S corps and C corps. So out of these definitions, if you have a hands-on owner who's working right next to beside his employees and he's receiving a paycheck, is he an S corp or is he a C corp? I'll let you guys think about that. So this slide, we're going to go over partnership, joint ventures, and sole proprietors. Now, I'm not seeing anyone on here right now, but I don't really care about that because this information is needed. Credit questions will grow over time as I figure these platforms out and how to share and how to invite people. This is just the second week, really. So I'm really proud of the work that me and my team are putting on to put these slides together and to face the nation, face the world with these things. Okay. So we're going to do this really quickly. A partnership is a formal arrangement by two or more partners to manage and operate a business and share its profits. Okay. Now, it all depends on what type of negotiation or partnership you guys are trying to, how should I say, split. Actually, it all depends on what type of split that you guys are going to have and understanding when you form your partnership, your business. Okay. And there are several types of partnership arrangements. In particular, in a partnership business, all partners share liabilities, profits equally. Okay. Now, that is important because it all depends on the negotiations that you have with your partner. Some might say a 60-40 split, some might say 50-50 split. It really all depends. That's why everything that you see here is not captured in a sentence or two or one paragraph. This should point you guys in the right direction to pick up a book, Google, ask a friend, ask me. You see my email, Gregson at CMD Solutions Group. This is the time in 2021 where we have to step away from depending on the government and take control of our lives. And understanding the differences between these business entities is going to give you that power and point you in the right direction. Okay. So again, a partnership all depends on the split, but more importantly, it all depends on the negotiations that you and the agreements that you and your business partner have. Okay. It's very important. Now, a joint venture is a business entity created by two or more parties. Now, a party can be an individual or a party can be different businesses. Okay. Understand that is very important. A joint venture is a business entity created by two or more parties, generally characterized by shared ownership, shared returns and risks, and shared governance. Now, the difference between joint ventures and partnerships, it might not be clear to you because there's more to that. You have to do your digging. But it says business, when it says parties, that can mean individuals or businesses. Okay, anyone who has interest in what you guys are doing. So you can have, say, a joint venture with a big business who's throwing money or investing money into your business. Okay, and then you split the pie however you guys split the pie. It's not necessarily 50-50, but again, it all depends on the negotiations that you guys come up with in negotiations and formulating that joint venture. Now, sole proprietor, I had a real big problem with sole proprietor because at the time, you're starting a business, money is tight, and you really don't know what to do. You don't know who to ask. Okay. So you just say, hey, I'm going to do a sole proprietorship because you don't have the full understanding of the differences when it comes to tax purposes, okay? Or even liabilities, which is the most important. I would say liability is more important than taxes due to protecting your own assets, your personal assets, okay? So sole proprietorship. A sole proprietorship, also known as a sole trader, individual entrepreneurship, or proprietorship, is a type of enterprise that is owned and run by one person and in which there is no legal distinction between the owner and the business entity. Now, I want to tell you guys something really quickly. If you have a business in your sole proprietorship and anything happens to you, it also happens simultaneously to the business. So if you don't have employees and you can't make it to work, you don't get paid. If you break that vase or you break that marble wall or tile, whatever, and they sue your business, they're also suing you. There's no distinction between you and the business. And that's very, very important. And I want you guys to understand that. There's no distinction between you and the business. So a sole proprietorship, and and this is to everybody out there, understand sole proprietorship because it is the easiest and the cheapest way to start a business, but it's the business entity with the least amount of protections. It might be the cheapest, but it has the least amount of protections. So when your business gets sued, you get sued at the same time. And there you have it. You have the distinctions between all business entities. And there are more. I just wanted to go over these because these are the ones that I'm really getting inbox and I'm getting DM. Hey, what's the difference between a joint venture and a sole proprietor or a partnership? So I decided to make these slides based off everything that I was getting feedback, because a lot of people don't necessarily jump on right now, but they watch it later and they ask me questions later. And that's the whole point of credit questions. So there you guys go. Credit questions is Wednesday. Is Monday and Wednesdays at 6:30. If you don't join me live, please join me later. If you have any questions, you can inbox me at Gregson at CMD Solutions Group. It's been fun. I love doing these 20-30 minute little presentations. If you guys listen, it's really, really important that you take back your life in 2021, start a business. Okay, because if you think about it, your life is dependent on other people when you have a job. And there's no problem having a job. We all need income. We all need to fund our businesses and we all need to take care of our families. I have that and I understand that. And I appreciate it because I do the same thing. That's how I got to this level. But please understand, you have to take your lives back because the government does not care about you. The government does not care about you. You're just a number. You're just a social security number. So the more and more you depend on them, the more and more you're giving power to them, the more and more your whole life and your family's life is dependent on them. So I hope these slides give you some type of motivation to get out there, learn the differences even more so, because it's not all explained in a paragraph or in a sentence. I hope that I'm pointing you guys in the right direction. So again, guys, I thank you for all the love. I thank you for all the questions. Every Mondays, Wednesdays, 6:30 p.m. credit questions. Man, listen, it's been a blast. So I'll see you Monday. And thanks.